Yo, back at it again with another beautiful trade recap. I think I made 1.3k today, the same as yesterday, same setup, same exact thing happening at the same exact fucking time. Every single day on the same asset, Nasdaq, New York Open. The same thing happens, okay? So I'm going to show you exactly what happened during this trade. Essentially, coming into the session, my bias was very, very much bullish, simply due to the fact that I was looking at the overall narrative of price, right? Since the start of Asia session, we were creating higher highs and higher lows, really showing that bullish narrative. And also, we were beginning to sweep the lows pre market. We were sweeping lows, we were failing to follow through and actually break them. Instead, we were inducing them, sweeping them, whatever you want to call it, right? Now, coming into the market, what actually happened was we generated these equal highs up here, which was an absolutely beautiful area for price to take out. Think about it. We're already bullish. We're sweeping the lows. We've generated these beautiful equal highs. I mean, it is an absolute no brainer. Price is going to come out and take these highs. So, coming into the session, this was my main draw on liquidity. Now, a lot of the times when you actually come into New York Open, you're going to have two things happen. You're going to have your inducement and you're going to have your draw on liquidity. Okay. Sometimes you might just have the inducement. Sometimes you might just have the draw on liquidity. But this time we had both of those two things, right? So, if I go over to the 1 minute time frame, what we actually had during New York Open over here was an inducement of these minor lows here. However, and this is really, really clever, we can actually correlate the assets, right? So if we go over to the S&P 500 over here, on the S&P 500, we actually took out this significant low. We took out this liquidity, meaning this is SMT divergence, meaning we don't need to take it out on Nasdaq because it's already taken it out on the S&P 500, signaling that the liquidity has essentially already been taken out of the market. Now, back over to Nasdaq, we know that the inducements happened, minor inducement here, but on the S&P 500, the inducement was more major. Fantastic. We know price is going to push up at this point. We have our major draw on liquidity marked out. We've already had our inducement, and now we're looking to get involved as soon as price gets into this area over here, right? Now, a lot of people trading my strategy would have actually entered on this candle over here, right? Because we're really close to the draw on liquidity. We've got these relative, bullish, strong momentum candles, displacement candles, whatever you want to call them, and we're coming up to this draw on liquidity. However, using my brain, I was thinking to myself, hang on a minute. Obviously, I take entries off of momentum candles, right? But what I actually saw, what I actually noticed was for some reason, the the strength, the size of the candles were getting smaller and smaller. So I said to myself, hang on a minute, I do not want to get involved right here when the momentum has slowed down so significantly. Perhaps we're going to have a reaction off of this order block here and induce some early sellers into the market before tapping into this overall draw on liquidity. So perhaps we're going to invite more liquidity into the market for the market to then push out, which is exactly what happened. Now, when did I actually get involved in this trade? I got involved once I saw momentum, bullish momentum, buying momentum significantly shoot up, right? And as soon as we broke past this high, I was immediately in the trade. I believe I got my entry somewhere here, targeted a 1-to-1, and I got the fuck out of there ASAP. I literally took profit in 1 minute. In 1 minute, 1.3k made. Boom, I was in and I was fucking out. That's all I done, right? So yeah, absolutely beautiful trade today. Interesting to see how I actually use the S&P 500 for my SMT. I don't normally have the S&P 500 on my watch list just because I like to be, solely focused on the Nasdaq. But it was of use today. It was of use. We saw that this was a true inducement of price due to the SMT, due to the fact that the S&P 500 took out this area of liquidity. So we knew, what, price has got enough liquidity, it's generated enough fuel for it to then move to the opposing liquidity, essentially. So yeah, absolutely fantastic day. And I'm also beginning to notice, this is my journal, I just say whatever the fuck I want. I'm also beginning to notice on particular days where there's, considerably a lot of momentum, what you can actually do, or what I'm actually planning to do. I need to collect data on it first before, I include it in my live funded trading. But on days where there's momentum, you could actually go ahead and say, you know what, there's so much momentum in the market. I don't want to take profit out 1-to-1. I'm just going to aggressively trail my stop, right? So when there's so much momentum, instead of just getting out, I'm going to aggressively trail my stop. You're going to put your stop loss here. You're then going to move it up to this wick here and just keep moving it up aggressively because you don't want to give your profits back to the market. Keep moving it up, keep moving it up. And then you would have got stopped out right over here, right? And you would have made some extra money. You would have almost a 1 to 2, 1.75, whatever. But you would have, gotten some extra money out of the market. Now, as I said, I need to collect more data on this to see if this is actually a viable way of, increasing my overall returns. But yeah, overall, an absolutely beautiful trade. I'm really, really happy with this strategy, really happy with this edge. I've been fucking inconsistent, unprofitable for the longest time. And then when I started noticing this pattern, I was trading all types of fucking instruments. I was trading Forex pairs, US 30, S&P 500, NASDAQ, Euro USD, AUD USD, GBP, JPY, all this fucking shit. And what happens when you're trading so many assets, the compounding effects of your skill set, you're hindering your own progress, because a beautiful thing that happens when you're only trading one asset during one time is over time you start to hone your skills. Over time, your pattern recognition, your intuition gets better. You understand the pair intimately. You understand why it's moving a certain way. You understand, I don't want to use the word predict, but you can almost see things before they happen. And this is real trader intuition. And this only fucking comes when you trade one asset during one specific time window. It's only going to happen then. If you're trading multiple different things, you can't truly improve your intuition and essentially your relationship with the asset you're trading, right? So yeah, after making that switch to only trading one pair during one time, only one asset during one time, I've been seeing fucking ridiculous results. I mean, I'm so incredibly consistent. I don't want to jinx myself, touch wood, but I mean, it's been ridiculous, especially only aiming for a 1-to-1 as well. It just makes my win rate so high. I'm winning almost every day. And, I'm not stupid. I've been in the industry for 6 years almost now, 5.5 years. Winning streak. I'm in a winning streak period right now. A few cluster of losses may come, but that's where the data is important. I'm in the process of collecting, 5 years of data, and that's going to tell me essentially my max consecutive losses, my average return. So I'm not trading in the blind, right? I know what to expect. If I take 5 losses in a row, I'm not going to fucking panic and switch strategies. I already know that that I can expect that because my data proves it. If I take 7 losses in a row, I can expect that because my data proves it, and I don't need to switch strategies. I don't need to quit trading. No, 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 none of that. We've already got the data to prove exactly what happens. And that's the beautiful thing about data and the beautiful thing about trading one asset at one fucking time. I'm so happy with this strategy, bro. Even yesterday, I mean, we done the trade recap yesterday. The same fucking thing, bro. Exactly the same. Inducement, tapping fair value gap, equal highs. The day before, where was it? What was this day? This was a Tuesday. The day before, inducement didn't tap anything into anything. You don't need it to tap into a PD array, but inducement, boom, run straight to the drawn liquidity. And interestingly enough, we had the same, you know, kind of candle momentum that happened today, where momentum was slowing down significantly here, almost showing us a doji candle, which obviously is a sign of a reversal. Price came all the way down, then we saw massive momentum, then I got in. But yeah, man, I mean, this is fucking fantastic. Let us fucking go. Come on, Shan.